Hello, everyone. My name is Deepak, and I'm a tax code advisor. And today we'll be taking a look at zip code 94560. That's in Newark, California. Those of you guys don't know, that is right next to this 84 freeway right here. And if we kind of go down here, this is where we have Facebook headquarters. So a lot of people who are maybe watching this video who are not from California might not know that. But this is a pretty interesting small little town because you cross the bridge and you come across Newark, California, and it's perfect for people who are going uh, to Facebook. So anyhow, a few years ago, before Facebook was not there, well, a few years, but it's been several years now. To me, it just feels like only a few years. But anyhow, Newark was not that competitive. But today, as we can see, roughly 1,600 square foot houses is selling for $1.3 million almost. So we'll be taking a look at this market in a little bit more details today and try to answer some of the questions. Now, I do these live discussion calls where we talk about tax updates, financial updates, real estate updates as to what's happening in our market on a monthly basis. If you want to join those live discussion calls, I'll leave below the video, and you're welcome to join them. Um, and once again, if there's any question that you might have, you are feel free to ask me that. I'll try my best to answer those. I'm not a realtor. I don't sell you the real estate. I mean, I'm not an investment advisor. I'm not here to tell you what to buy, what to sell. I'm a tax advisor, so my consultations are purely based on taxes. But I'm a student of finance, so I like to study some trends and share those trends with my friends, family members, and anybody who would like to discuss and debate with me. So you're welcome to share your thoughts on this video, please. All right, so let's get started and let's take a look at what's happening in Newark, California. All right, before we look into real estate for Newark, California, let's try to understand the population growth in this area. And we can see from 2011, population has steadily been growing in this area. So from we can see from in last 10 years we went from 42,000 to 47,000. In 2022 it peaked, and it has been starting to decline now. I think a lot of people are sort of moved out of California, and I think mostly people moved out from these areas which were super expensive. And I think Newark, Fremont, those are some of those areas. So that's one data point I would like you to know. But the second thing, in relation to population, we should also take a look at what is the median household income looks like in this area. So we can see back in 2011, that number was $81,000. And take a look at that. Now it's almost $170,000. So if you kind of look at those numbers from 2011, if you compare that to population hasn't really grown significantly, but the income in that area has improved a lot. So $170,000. That means, we were looking at that house, which was $1.3 million. If you think about it, most people can afford a house on that income in about what, 7 years, 8 years, if you were to put all of that money into real estate. you know so let's take a look at that in terms of income growth. So income growth in this area has been up and down, as we can see. You know, um, for example, we saw a lot of growth in 2021, 2020. You can see all these are almost double digits growths, but 23, 24, that income growth has started to come down a little bit. Let's take a look at the home ownership in this area. So we can see back in 2011, and I love this number because it gives us a little bit of a comparison point here. Was 72%. 72% of the people own the homes, and now it's down to almost 67, and looks like people are starting to buy a little bit more. Now we don't have a data as of 2024. We'll hopefully we'll get that in a few more months, but it looks like about 70%. That means 30% of the properties are actually owned by investors in this area. How about, are these people, buying these on cash, or these people are using mortgages? So when I look at these numbers, I see that from in this area, like in 2017, 2018, there were some cash transactions, but most people are actually taking mortgage. So people are not really buying it on cash. What about the age of people in this area, we can see that most are young people. Median age right now is sitting at 37 years age. And another thing I like to focus on is poverty levels in this area, which I doubted. I think the poverty has gone down quite a bit. And you can see back in 2011 was almost 6%, and now it's down to 4%. People are definitely getting richer. Now, those of you guys who are not from Newark, you might not know there's really not a whole lot of space to build new housing in that area. So kind of hard to do that, but still looks like we've been converting some older homes and building multifamily and all that. But we can see from back in 2011, we used to roughly only have close to 14,000 household units, and now that has grown to almost 15 and a half. So almost 2,000 units has been added since 2011. So this kind of gives you an idea that how fast can we actually build. And that's the big problem all over the place, but especially in places like Fremont, Newark, where there's just not a whole lot to build. So, if I take for example, 15.4 minus 13.7, that is not even 2,000 units. So if I do that over 10 years, so that's roughly less than 200 units a year. So we're not really building a whole lot. That's a major problem. And again, I don't have a data for 2024, so we will find out a little bit more. But it looks like from 2017 that number started growing. But if you look from 2011 to 2017, that number was stable. So looks like only in last 5 years we start building homes. So, but still, we cannot really build that many homes in that area. So that's one problem. So let's take a look at home values in this area real quick to see what's happening here. 2011, the median household price was barely at less than $400,000, and it has been 3x since then, sitting at $1.2 million. Even in 2023 was average price was 1.1, and 2024 we are at 1.2. So I thought that it's important to know. Look, 2022 was 1.1, 1. Even in 2023, and now we have seen it going up by $100,000, um, which is very, very interesting because if you look from 2000 to 2000, roughly 12, prices were really not moving a whole lot. Even during 2006, 2007, we went from 300 to 600 and then came back down to 400. But now prices are growing quite a bit. You see, from 2012 they are just on like a rocket ship. See that? um, been super crazy, and primarily because of the income growth. So if you remember, I showed you the chart, like from around this time to this time, income has been growing. So income has always been the primary factor in driving this value. So if I were investing in this market, one of the numbers I would probably look at is whether income will continue to grow, and would it grow at the same pace as last few years. So I would go back to those numbers. Let's take a look. What would be the fair housing value would look like right now? So if I look at this number, see this gray line right here is showing me today it should be 1.1 million. Like in 2022, for example, it was almostly fairly priced. 2023 was fairly priced, and now it's still slightly overpriced right now. But if we can get it around the same price, about 1.1 million, that would be more of a fair price. So that's pretty interesting. Now, where do we get this fair home price value? So you can easily pull this up on your Google as well. You can just go to Zillow Home Value Index and type in the zip code to pull this number up, and that will kind of give you those numbers right here. So that's where that data is coming from. But obviously, we know Zillow is not always accurate. But honestly speaking, they probably have the most data. So because they have the most data, it's easy to kind of make some decision. You can always go here and just type in your zip code to figure that out right now. And as we can see in last 1 year, like I said, prices have gone up almost $100,000. I mean, this is incredible. If it can maintain the same streak for next 10 years, this can be an awesome investment. But again, like I'm a believer in the income part. So if people are not making that much money in that area, or they might lose jobs, or incomes might drop, then the pricing for houses will most likely will drop as well. Okay, so let's get back into our home pricing here, and let's take a look at some of the other data points. So I like to take a look at this chart. It's a very interesting chart because it compares the home prices with the income. So um, if we take a look at right now, we are sitting at 7.6, and back in 2017, 2019, that number was even higher. So sometime when people talk about, oh, this market is super hot or this and that, well, pretty much ever since 2012, we know it has been on rocket ship, but it's not really the home prices that's been on rocket ship. It's the income in that area that has been on the rocket ship. So in order for this to come back down to these numbers right here, I think incomes will really have to come down. Another thing is, if we take a look at the interest rate, that has been helping a whole lot as well. So we have to see what happens with interest rates in the next 5-10 years, if that can help bring some of these prices down as well. What about the mortgage rates, mortgage payments in this area? Let's take a look at that. um, Affordability, basically, that's what it comes down to, right? So back in 2012, we can see mortgage payments were roughly about $1,500, and now they have increased to almost $8,000. And this is very interesting, because if we see $8,000, and we saw the household income, if I remember correctly, what it was, like $180,000, if I remember correctly, right? So today you're paying almost $100,000 in a mortgage payment. So if I were a median household in Newark, California, earning $180,000, maybe I'm in 30% a tax bracket. Out of that 180, maybe $50,000 is going into my taxes, and I'm left with 130. And if I were to buy a house there, $100,000 of that will go as a mortgage payment. That means my net profit will be only $30,000 to do anything else that I want to do for my home. That includes my kids' education, travel, food, all of those expenses. So affordability is just super bad in this zip code. Okay, let me share another chart with you. This chart will show you salary you need to make in order to afford the home. Back in 2012, or this time frame right here, pretty much average person in that area could easily afford a house. From 2000, let's say from 2008 to roughly 2013, um, average person can increase the house. But now that number has gone crazy. Now you need to make at least $320,000 in order to afford the house. But the median household income, as you know, is $180,000. Why? Because not everybody's working in IT. There are people who own the houses there for a long time. Maybe they're working as doing some other jobs, and they're able to live there. But if you want to buy a house today, you need to be able to make $120,000 a year. So this is a scary part, and it's scary part because back in 2021, that number was not that bad. You could still afford it at 170. Why? Because of the low mortgage rate. So this time right here, from 2016 to 2021, salaries were increasing, but the mortgage rates were low. And now that mortgage rates are here, that is making it really hard. So if you were to ask me, hey, can this trend continue the way it is? Well, the problem is this portion right here. I mean, how do you justify the growth of prices if interest rates remain up here and affordability remains low? So if interest rates come back down, and maybe you need to make $170,000 salary, then yes, you'll be able to afford the house and market will continue to grow. But if interest rates stay as high as they are, and you need to make twice as much as what a median person makes in Newark, California, then that's a big problem. Okay. And if we take a look at the mortgage and compare it with income, almost 60% of your income would go towards mortgages. I mean, that's just not good. In matter of fact, you can't even qualify for a loan. Most lenders will not like this number to be over 30%. So right now it's double that, 60%. So not that good. Property taxes are really good in California. That's one of the advantages we have. We can see the property taxes were really high back in 2012, and they've been coming down, mainly because of the prices of homes that have gone really, really high. Okay, let's take a look at from June 2022 to now. Why? Because for the most part, this represents that area where there were some opportunities. So as we can see, we're almost back to the same number. So if you wanted to take advantage, last year was your time. So things are kind of interesting right now, and I think what it is a lot of people have been expecting the interest rates to come down. That's why people are taking a lot more risk right now. All right. Home prices growth. Let's take a look at that as well. I think that kind of gives an idea. If we see in most of the time we have growth, except in some years right here we can see there was some negative growth here. But most time this and I think that's common for California. Most people know that. Okay, so now if I was an investor, what kind of things I want to look at? Well, first thing I want to take a look at is whether this area has more inventory or less inventory. Well, guess what? Even today it's less inventory, but it's changing. For example, in 2018, that number we had almost 77 homes for sale, and now we can see that we only have 38. That means it's even below the long-term average. So even though the rates are all-time high, interest rates are all-time high, there is just simply not no inventory, primarily because people are sitting on those low interest rates and nobody wants to change anything this area. So that's the biggest problem. Are people cutting prices? Let's see. uh, so yeah, looks like people are cutting prices because people are pricing these properties really, really expensive, but that number is decreasing now. Back in 2022, we can see 35% of the properties people were cutting prices. Now that has dropped to 19%. So very interesting. How long does it take to sell the property in that area? Let's see, almost 31 days. So once again we can see in 23 it was kind of negative, but now it's 31 days. And let's see, well, there's really not much inventory in that area, so I would not really focus so much on. But let's just say if you're buying an investment property, let's take a look at the rental rate in the area as well. That will kind of help us a little bit, and we can see the rent has been consistently going up. So if you would have purchased this property, let's say in 2011 or 2012, around that area, you would have been renting at about 2200, and you are now renting at 3500. So pretty decent growth there. And let's see how many homes for rent. Back in 2011, once again we had oops, sorry, I don't think I have that number here. Okay, I don't have that number right now, but let's take a look at the vacancy of these rental properties. Okay, so from 2014 to 2017 was very hard to find a property in that area, but now almost 4% of the properties are staying vacant, but most get rented out really, really fast. So um, so pretty good area if you can buy it. Like I said, it's going to be very, very interesting. Let's see what Zillow says about the home prices increase in this area. you know so we can see the number we are getting is roughly at 55. The higher the number it is, that's better for you. So right now, it's okay, it's still not below 50, so you still have good indication in this area. But like I said, the key risk here is the interest rates and the income growth. Those are the two main factors we need to focus on. But the main point, I think, if I was an investor, the biggest number for me would be looking uh, at the rent growth in that area. So we can see that rent has been consistently growing. So I can fairly assume that, you know let's say if I look at a 10-year from now, my rent probably going to be close to almost $5,000, 10 years from today. So the question is, what is my long-term horizon? If I'm buying something, am I buying for 2 years, 5 years, 10 years, 20 years, and so forth? And pay attention to this rent growth. Oftentimes people miss out on that. So that's what's happening in this market. Once again, my name is Deepak and I'm a tax code advisor. So if you want to know anything about real estate, anything about finances, welcome to contact me. I'll be happy to share my insights with you. You can always join our live discussions call for free on a monthly basis. I will leave a link to that call. So we'll see you on the next call. And for this year, we were doing it earlier on Tuesdays, but now we're going to change it to Sunday. So it's going to be on Sunday morning. That's the new date that has been requested by most people. So thank you so much for spending some time. Hopefully, you find this information helpful. And if you have any questions, please leave it at the comment below the video. I'll talk to you soon. Thank you.